Hi there. This is the story of Alibaba, ticker symbol BAB or BABA. Right now the market cap is about 321 billion and the price $145 per share. They reported the results for the first quarter 2026 their fiscal year, and the price has increased about 12%. Now the most important question is whether Alibaba is still a great investment or a great investment at the current price and market cap. And the answer, you will find it in this box. During this video, I'll open the box and you'll find the answer here. Now, to understand my answer, you have to look at their business, their segments, and their next steps, right? If you look at the revenue over the last 3 years, it has increased from 126 billion to 147 billion. And for the last quarter, an increase only of about 2%. Now here you have to be careful because Alibaba sold two businesses, Sun Art and In Time, also related to commerce. But if we were to add those two businesses, the revenue would have increased by about 10%. They said that in their reports. So the growth rate is quite high. They got rid of those two businesses because they want to focus on high margin businesses. Then if you look at their earnings, it has increased from 10 billion to 17 billion, and for the first quarter 2026, an increase up 76%, close to 6 billion. Now again, here we also have to be careful because Alibaba is a special business. Don't take their earnings for granted because they are also affected by their investments in other companies. For instance, they have a stake in Ant Group, and quarter over quarter or year over year, their earnings will fluctuate based on the prices of those companies because Alibaba is investing in some public companies and they report their losses here in their earnings. So you have to be very careful. And also about their free cash flow. As they invest in their business a lot, you will see lower and lower amounts in their free cash flow. So you have to be very careful with their numbers, how you read them. Because sometimes you can see a decline of 70% in their earnings, but that's still good. That's great for Alibaba. And sometimes you can see 76% increase in their earnings, and that can be bad for shareholders. So you have to be very careful how you read their numbers. You have to study this business very well. Now, the most important thing for you, forget about their numbers. Look at their businesses and see, the most important thing, look at their businesses and their revenue. First, as you probably know, they have more businesses, more segments. But first, let's start with the most important. Alibaba China e-commerce. This segment reported quite a high growth rate, an increase of 10%. And you also have sub-segments here. Customer management has increased by 10%, and this is quite important because most of the profits come from here. High margins. They have high margins here. Then direct sales, 7%. Here they have low margins. Then surprise, they started to invest in a new sub-segment, quick commerce, and they said that it's growing quite fast, and they expect profits here in the future in the next quarters, and they report an increase about 12%. And commerce wholesale, an increase of about 13%. Now, the most important sub-segment here is customer management. When you see their growth rate, double digits, 10%, this is a plus for Alibaba. Just remember this. When you see something like this, customer management increasing by over 10%, that's a big plus for Alibaba. Because here you have high margins. They generate a lot of profits from this sub-segment. And they also said, the management said that they also expect from quick commerce and also the other segments. Commerce wholesale, and also some money from direct sales. So this segment is quite important because most of their profits comes from this segment. Now, another important segment is Alibaba International e-commerce, where they maintain their growth rate over 10%. They reported a growth rate of about 19%. This is quite important. They have maintained this growth rate about 20% over the last years, and this is important. And the earnings, adjusted earnings, up 98%, and they almost become profitable. This is a big plus. They can generate at least half of the profits from China e-commerce, then Alibaba International e-commerce will be quite an important driver. Then, the biggest surprise and the biggest growth rate came from Alibaba Cloud, with a growth rate over 26%, an increase in their earnings of about 26%, and is already profitable. And here is the highest growth rate for Alibaba Cloud, higher than Alibaba China e-commerce and international. Here you will have the highest growth rate in the next years and also profits. And the market really likes this. Really likes this. And also management said that they have two historical opportunities to invest further. Alibaba Cloud, AI, their cloud infrastructure and AI, and China e-commerce. Why is that? You already know. AI, big sector. China focus, Asia, quite important. China e-commerce, there you have 1.3 billion people. And by the way, China is growing their GDP by 5% a year. So there you have, the biggest opportunity on this planet. Maybe you can see other opportunities, some growth rates like this in India. But Asia, right now, the highest growth rate. And this is quite important because if you look at other countries, their GDP lower than 5%, for others flat. And the market really liked their results. That's why the price has increased by 12%. Of course, they also have other segment, all others. Here, also an important revenue. It has declined by 28%. And also their earnings by 41% and close to profitability. And here they have companies like Sineo, their logistic arm, their former logistics segment, healthcare, a map, and other products, games, and other software products. But the most important segments going forward, and also have to look at their margins, are Alibaba Cloud and Alibaba e-commerce. Those are quite important. They will continue to grow more in the future for sure. And they will also deliver profits, high margins. International, also, it will grow more in the future, but their profits, I don't think they will be so high as in China, because you also have logistic costs. Here, your margins may be lower, but still, it will be an important segment. Because once they build their infrastructure, people spend more money on this platform, they can charge higher commissions, higher fees for merchants, make money from ads, and it will be quite an important driver. Now, the big question is, how do you value this company? Because going forward, the earnings may get lower, and so their free cash flow, because they invest more in their cloud, AI, and e-commerce. They already announced that. So you have to understand that Alibaba is not a short-term investment. You hope that the market cap will double easily by the end of this year. It may be possible, but you also have to look at their earnings. To see a double in the real earnings and real free cash flow, you have to have a long-term horizon. If you invest for the long term, yes, Alibaba is a good investment for you. If you hope for a quick buck, I know 50% in the next month or months, then Alibaba is not for you. Alibaba is for long-term investors, and they really do the right thing. I like the results, what they deliver, and what they want to do next. This is quite important. So now, to open the box and show you the answer whether Alibaba is a great investment or not, here you also have to understand on the return you want. For the moment, as the market cap is about 321 billion, yes, Alibaba is still a great investment. Take into account their assets, their future growth is a good investment. I would say a good investment at the current price. A great investment was in the past. If you remember my past videos, when the market cap was about 200 billion, I said in my videos that buy. I've always said that I've been buying a lot of Alibaba shares. Now, the current price is still good, but you also have to look at your strategy, how you want to position yourself. Now, if you want to know more about Alibaba, what's the right price to pay for it and when to get out, because you have to be careful. Alibaba can become overvalued and can no longer be a great investment for you. So if you want to know more about Alibaba, go to my profile, choose Titan Investor, and there you'll see my portfolio. What price I paid for Alibaba when I bought it, and how I will plan to continue this investment, because it's quite important. And of course, in my portfolio, you'll also find even better investment ideas than Alibaba, if you can believe that. Right now, there is a company cheaper than Alibaba. Plus, you also get access to an investing course and other in-depth analysis. So, that's it for this video. And if you have other questions about my portfolio or Alibaba, please let me know in the comments.